Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everybody. Welcome to the Finance Friday edition of Wealth Coffee Chat. Morning, Jeff. Thanks for joining us. Why did the mortgage broker write a novel? To diversify his portfolio. We've had a lot of interesting news in regards to rates, and the current information that I have is that most likely rates will be on hold at least until Christmas this year. So no more rate cuts in the next couple of months. The next one is probably projected either November or December this year. Now, what I wanted to share with everybody today is that in the past couple of weeks, I have been talking about checking in with your brokers now with interest rate drops and making sure that we get an updated check in with our borrowing capacity. So seeing that now that rates have dropped, our ability to actually borrow more money. And what I have noticed, and what my teams have shared with me also, is that the amount that we could borrow hasn't increased as we have thought. And we've been trying to get to the bottom of it, and we've realized that there's something else that happens in the background that often doesn't get talked about, which actually has a huge impact on how much you can actually borrow. Now, we all talk about cost of living increasing, and the banks have actually been using that. The banks rely on what they call HEM. What does HEM stand for? HEM stands for Household Expenditure Measure. Now, how the banks use this is it is a benchmark that they use as a guide to gauge borrowers' regular outgoings. So what that means is based on your postcode, based on your income, based on the size of your family, they use a standard measure. And that standard measure has actually been increased. Now, so HEMS has actually been increased. Now, when we submit an application, if your living expense is above HEMS, no problem. They would just ask they'll ask you, they'll ask what the expenditures are, and they will use that within their servicing. If it's under HEMS, then they want us to actually explain why you're able to live under HEMS. Now, there are plenty of people in this country who live below the standard. I'm not saying in terms of poverty, but in terms of being able to manage their money. And I've had plenty of clients in the past where I've had to argue with the banks as to why the living expenses they've used compared to what the client's actual living expenses based on bank statements that we've gone through and given feedback to the clients. Now, when we were going through the Royal Commission, brokers had to actually explain every single living expense and the reason why, how we got to that amount. And then we tended to the lenders, and the lenders actually come back and audit the living expenses and then compare it to what we'd provided. And then we would actually have discussions about why there is a difference. Now, these days, our feeling is that the lenders have actually stepped back and they haven't taken as much focus on the details of the living expenses. If it's somewhere near HEMS, they're happy to accept that. Now, often in the past, we've had to comb through bank statements line by line, categorize it, and send that off to the banks. The banks now have started using an open banking system, which enables our software to be able to connect to the bank's software, so that we can create a report and grab the information that we need, so that we could clearly categorize the living expenses and provide that to the banks. This helps speeds up the process because you don't have to send us bank statements, or we'd often ask for an Excel version of the transaction so we can actually go through the list. And it saves a ton of time. We can go from it taking a few days to run through people's living expenses to getting it all done within seconds, really, of once you've connected the bank account to the open banking system. We get a report, I would say probably within 5 minutes. So it saves everybody time, and it's super accurate as well. The reason why I share this with you is that I actually have had a client who we've been requesting documents from them, and it's taken a while, and we've gone back and forward, and we actually got to the point where we were ready to submit the application to the lender, and all the figures worked out. Once we sent it to the lenders, a couple of days, the lenders came back and they said that they were going to decline the loan. And we were just really curious about why, because it was fairly straightforward. Clients were self-employed, they were paying themselves a wage, and there were some add-backs within the business. That was it. They just had their home loan. And as we were trying to go back and forward with the banks, missing phone calls, all those things that you enjoy when we're working with the banks, the lenders didn't know, and we couldn't figure it out. And we went back through our systems and our notes and our servicing calculators, and we noticed that the servicing calculator had been updated, and a system that we use quickly had also updated since the time we originally had the conversation with the clients. So now it wasn't servicing within both of those, and the only thing that had changed was the HEMS that they were using. So we did some exploration and did some figures with some other of our clients, and we noticed that the borrowing capacity hadn't increased how we had anticipated. And the reason for that was that we had now had to factor in a higher hem that the banks don't really update on us on when they update the hems. It kind of just gets built into their calculators and the systems that we use. And we get a surprise because we could have a conversation we had with you a couple of weeks ago has now completely changed. And your borrowing capacity, especially when you're actually on the line, which was what happened with our clients. Like he was dead on the fence in regards to servicing, and now HEMS is just basically meant that he's unable to proceed with the loan that he was looking at. The reason this is important because another factor that we often have to work with is how long it takes for documentation to actually get provided to us. Now, some of my team have waited months. I think one of my teams had waited 5 months to get all the documentation, which kind of means we then had to go back and ask them for updated information because the stuff that they sent early on was now out of date, and we wouldn't be able to use it to submit it to the banks. So I encourage anybody who's going for a loan to put out some time to actually gather all the documents that we need and then send them through all at one time because it helps accelerate the process. We've worked out that we can actually get a loan approved and loan documents signed within a week. Now, I'm talking about similar case, a very simple loan application for a PAYG, and the clients the clients provided the documents as soon as they got off the meeting with us. And the lender that we were able to go with was able to approve the loan within an hour, and loan documents issued within 4 hours, signed digitally. So it's possible for us to call our clients, have a conversation with them, and actually get a loan approval within a week for them. So that's our capability in terms of being able to execute on getting a loan approval for our clients. But a big part of that is how clients work with us. And I know what I hear often is that clients will come back and go, "Oh, but you asked for so much information." One of the reasons why myself and my team ask for more information is that, and compared to other brokers, and I've heard that as well, is my previous broker or other brokers I've spoken to don't ask for all that information. And the reason why we do ask for all that documentation is that we want to work out all the different solutions. Tim, I totally agree. Like documentation, especially when you've got a lot of investment properties, multiple companies, can be very time consuming. But in order for brokers to be able to fully assess all the different options, we need to know all the information. And we also need to anticipate anything that the banks may find out and address it up front, because that accelerates how fast we can get a loan approved as well. Again, we've had clients in the past where we'd send them information. I've had clients who've actually told me, "This is all I'm going to send to you." We work with the clients, we send it to the banks, and we get a list of questions. And then we have to go back to the clients, and they're like, some clients have asked, why didn't we request for that initially? Some clients are like, no, we don't want to send that information to the lender. Often when that happens, that raises red flags for the lender. And I know that that's not always the case, that you haven't done it. But for us as brokers, I feel like sometimes compared to all the other professionals, we have to know and anticipate the banks finding out all this information before we submit an application, or else we're going to get surprises and we may not be able to get a loan done because of that. It doesn't mean that all the information that you provide to us, we actually send it off to the banks. Now, our job as brokers is to make sure that we get the information and then present it to the banks in a way where they're going to be comfortable with lending you the money. And so, for most people who are employed, it's fairly simple. 2 pay slips, an income statement. It's for the clients who have more complex business structures, who've had changes. Not when it comes to self-employed, we actually have a lot of lenders who just look at 1 year's financials, but we often ask for at least 2 years to see which year what's actually going on with the business, and which year we can actually use in terms of lending. So the pushback we often get is that when clients ask for more, for why we ask for all these documentations, we always tell them that we're here to gather as much information as possible so we can provide the banks the best scenario for them to be able to lend to you, for them to be able to approve your loan. So yes, documentation, it may feel like we're asking for everything, including your kitchen sink, but the reality is that it helps us provide a better application to the banks, give you a lot more options in terms of lenders than if we just went through and did it piece by piece. Because there is times where we have a conversation, we're like, yes, when we talk to you, it sounds like we can do this, so we'll ask for this. And then when we actually get the documentation, it doesn't provide the evidence that we need, then we have to go back to you and ask for more documentation. So much easier to say, here's everything that we need. Give us some time to run through everything, and then we'll come back to you with your options and a finance solution. So I would encourage everybody, take the time to sit down and gather all the documentation. Another thing is help your brokers build a relationship with your accountants. It may mean that it's a lot easier for us to ask for documentation from your accountants, because most of the time they have that information. And we often ask for a lot of documentation. It's so that we could help you. So take the time to get all that information to us, because it actually will help us provide you with a better result. That's it for me for today. Thanks for joining me. I wish everybody a wonderful Friday, an amazing weekend, and I will catch up with you all next week. Have a great day.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.